Good morning, everyone. Welcome to our live trading room at Admiral Markets. My name is Chris, and we're going to take a look at the Forex market and what kind of impact the FOMC had yesterday. And that sure had an impact, of course, as expected, because this month was really going to be a cliffhanger in a way, because last month was very quiet. The FOMC this month had a pretty big expectations, I think, from the market, and definitely visible in this this FOMC announcement. We're going to take a look at those reactions in just a second. Good morning, everyone. Good morning, Bogdan, Aukas, and Piotr. Thanks for your wishes there. Before we take a look at that impact, of course, always the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar and video as well is for educational purposes only. Video, I mean, for people who watch this after, because this is a live session. As indicated here, live trading room, we're going to take a look at intraday trading primarily. And later on today, we have a webinar on breakouts, I believe, trading breakouts. And that's important because that's what we do here a lot, in fact, or we try to do a lot. Sometimes we take Fibonacci trades, or we look at the Camarilla pivot point indicator, especially for intraday trading. But if we're swing trading, we're trying to define the trend, all right? Because even if you're trading ranges or reversals, you need to know what environment it is. So we need to know if there's a trend going on or not. Then we're looking for divergences, Fibonacci, support and resistances as a classical technical analysis with trend lines, okay? So that's the main frame of our trading here. And then we focus on establishing that trend bias, looking if there's any pullbacks, checking for filters, and then what is the opportunity to trade? Are we choosing a level, looking for confirmations like price action, candlesticks, or are we breakout trading? So we're going to take a look at the calendar today if there's anything going on. But before we actually look at the calendar and the how do you call it, the Forex market, I'm going to introduce and welcome a manager from Admiral Markets, Michal.
Good morning, ladies and gentlemen. Good morning, Chris. Thank you very much for a lovely introduction. In just a few seconds, I will switch the screen to my computer. There we are. And I will start with my part of the webinar. Thank you very much. Once again, it's Michael Onhoff, a client relationship manager from Admiral Markets. If you have any suggestions for this webinar, if you want to introduce a topic or just plainly ask me a question, you can always do so on this email or via Skype. You can always Google my name as well to find me on LinkedIn and other social networks. I'll be more than happy to accept you as a connection. I'm very glad to see all of you at this webinar once again. Those of you who have attended Admiral Markets webinar sessions and have heard me before know that before we get to serious business and discuss intraday trading and other various complex concepts, I like to take a small detour, and usually I like to tell a little story. And since this webinar session is dedicated to Forex trading, you will be taking a lot about various currency pairs. I would also like to discuss a pair of sorts, but a slightly different pair. I want to speak about the pair that is constantly having a battle deep within you. I'm talking, of course, about your present self and yourself in the future. There you go. Here's yourself, the present, and the future you is also here. Every single one of us have experienced this battle between the future self and the present self a million of times. When you decide to stop eating junk food, quit smoking, maybe put a 10% of your paycheck into a savings account, this kind of thing. And those goals are being set to you by your future self. Your future self wants to look good, enjoy good health, and be financially stable, and have enough money saved to buy a property or retire in a good pension. And I bet that every single one of us have failed on a lot of very good plans their future self has set for them. So why did that happen? Well, the problem is that, just like some smart people, future self is not very strong. He's a lot weaker than yourself in the present. The present self has a pair of powerful muscle hands that can buy hamburgers and French fries, with all the money you wanted to save, and then maybe have a nice nutritious smoke after that. So the battle between your future self and your present self has been fought for 100 years and has always been extremely difficult for your future self to win. 19th century economists set on temptation that to abstain from the enjoyment which is in our power now and to seek distant rather than immediate results, those are among the most painful exertions of will. That was said in 1836, and it's still very, very powerful right now. So if you put everything into financial context, your present self wants to spend, and your future self wants to invest. The concept of investment is not only applicable to money. You can always apply it to time as well. And you're a great example here, because instead of spending or even wasting your time, you have decided to invest it and attend this webinar. Today, your future self was victorious, but it is now very important that you invest your knowledge you're going to acquire today. Otherwise, it is going to be a sunk cost. So when this webinar is finished, you can apply the concept of investment to where it truly belongs. Once the webinar is finished, you can invest your funds into an asset that you expect a capital growth. A few of you might argue that Forex is mostly speculating, but our Admiral Markets standard account offers you an easy and convenient way to invest into the growth of a company. You can long shares on Apple, Boeing, Facebook, or Exxon. These are just a few examples of the CFDs on equities you can acquire. Or if you feel like you would like to invest into a whole economy, you can always long the indices such as Dow Jones, FTSE 100, or DAX. And if you're pessimistic, just short them and see if the market agrees with your prediction. Either way, when you invest, you're making sure that your future self perseveres. And whilst you watch your investments appreciate, so will your self-control, your discipline, and your financial stability. Thank you very much. Once again, I remind you that in the month of September, we are doing a webinar special. You can receive a special bonus on a deposit higher than $1,000. So if you're planning to deposit that much and you're watching this webinar, you can reach down to me to get the full details. I'm very happy that a lot of people did that last week. They're now getting their bonuses dispatched to them, instant bonuses, very good for them. So if you want to take part in this promotion, get back to me by email or Skype. I will be waiting. Thank you very much. Once again, it's been Mikhail Onatov. It's been great to speak to you people. I'll now pass the microphone back to Chris, who will continue with intraday trading, today's topic. Thank you very much.
Thank you so much, Michal. That's always great stuff from Michal here, inspirational words, and also a very interesting offer right there, something well worth your time to ask Michal more details about. All right? So I'm going to click on this Forex calendar, and we're going to take a look a bit more into detail what happened here with the dollar indeed. Bogdan said the market didn't expect it. That's definitely true. There was a bit of anticipation that maybe one day tapering could happen. And apparently a small tapering of, say, maybe 10 billion out of the 85 was not even possible. So kind of indicating that the U.S. economy is maybe slightly improving, but definitely not improving enough to even implement the smallest of taperings. So that, of course, caused a lot of reactions to the entire global financial markets, not only the Forex, not only our Forex. The euro dollar went up 200 pips, the pound dollar went up 250 pips, the dollar yen went down 150 pips, a lot of dollar weakness, but also crosses. The odd in New Zealand raced up against almost all the euro, pound, the dollar, the yen, the odd in New Zealand, risk on basically yesterday with that announcement. The gold went up from 1300 to 1360. S&P and Dow Jones, I think, hit historical highs at their, really highest levels of the entire history, as far as I saw on the charts, at least. Then we got oil bounced up. What else happened? Other indices probably went up. I saw the FTSE went up, at least, that's for sure. And gold went from 1300 to 1360, if I didn't say that already. Anyhow, clearly risk on. So yeah, that was some, I think, a minority maybe, but yeah, it was always 50-50. They went for the stability of the tapering. So what do we have today? We have retail sales 1 hour 34 minutes from now, and we got a Swissy interest rate announcement in 34 minutes. So no Swissy trading for the moment, at least. And later on, the usual USD initial jobless claims and existing home sales. So how did that tie in? First of all, we're going to take a look at how, before we do intraday trading, we have to take a look, or I think we have to take a look at how the currency, how the technicals are looking at or looking to behave now that we've had this impact on the of the FOMC. Okay, so we have to take a look at the new technical picture. Until now, we were in this uptrend channel, but we were looking at these fibs and seeing respect for those fibs. So let me just pick my drawing tool because I don't have that open yet. Oh, 1 second. Okay. All right, and I'll go back to the charts. Apologies for that. Alrighty. So what we had yesterday was the situation where we were saying that this was a 5 wave, but maybe it's a correction. We said that this is an uptrend, but we are reaching every time a resistance at these fibs, the 236, the 50, the 618, and the 786. So the chances are high that the 886 will be respected as well, together with this trend line, right? Those chances were there, but obviously the FOMC blasted that away, and that was one of the fibs, together with the 382 fib, basically, that didn't get respected. Those things happen. That's part of trading. I anticipated a bounce at the 886, hoping that we would get the same reaction at the 56, 18, 786. Maybe the, oh, you don't see my charts? Okay, 1 second. I will reshare that. That's strange. 1 second. There it is. Good. Took a while, but we're back. So, you know, obviously all these fibs usually get respected. Some of them don't, and maybe the moment of the FOMC wasn't the best for the 886 fib because you know, it's always a volatile moment in time, right? So that one went down for a small loss, but I did take a pound New Zealand short and a New Zealand yen long, and those trades went very well for me. The pound New Zealand was closed for 3-1, and the New Zealand yen for a 2-1. So that's great. And this one I put extremely, also a bit smaller risk percentage than normal, by the way. But anyhow, that's part of trading, and FOMC can do that, right? If there's any news event that could rock the market in one way and blast through fibs, then it's a moment like that. All right. So what we can look at for now is the bigger picture, because now that we've pushed through those resistances, we can obviously see that we have a full day candle above that trend line. We're above these tops. So what would be the next resistance? Well, obviously, this year's high, right? This peak here of January 2013 is this year's high at 137. We still have an 886 fib at 136. Those are potential resistance spots we have to be aware of. Otherwise, we're definitely set in an up mode. And in fact, if you look at the bigger picture, we probably can conclude that this three-wave move isn't finished yet. this is a pullback, and we are getting that continuation. That was my main analysis for ever since we got this first move up, that we would get that three-wave up. Somewhere in here, sometimes you get a bit doubtful because of the fact that things take so long to develop that maybe there was a potential of this happening as well, for example. So I started to be a bit more 50-50-ish and wasn't that determined as before on either direction. Now I think we can slowly but surely say again that this is probably going to happen. We got roughly a 50% bounce between 650 and 618, and the target of that most likely will be the 141.60. But once again, we do have some resistance in here at 136, 137 to crack before we can get to that target. All right, that's the euro dollar in my opinion. Back to our normal time frame though. Oh, the gap, well, not really, I think. I've seen gaps really take long before they close. So I wouldn't be too worried about that. If a gap doesn't get closed within the first few days, I just forget about it because I don't think it's really something that we should be concerned of, personally. Because I've been, in the past, I've seen gaps and I thought it has to close, and it never did, and it took maybe, I don't know, I would have to check that example, but sometimes it can really take long. It was close to filling anyhow. If you look at from this perspective, what is it? Just a few pips difference. You have to realize that a lot of these candles, every candle that isn't squared up and was squared up, I mean, hasn't been retraced, is in fact a small gap. And once in a while, a candle doesn't get really squared up, it doesn't get really retraced, like this candle. It really never got retraced. So there is like a kind of a candle gap, and so I wouldn't be too concerned about it. Let me say it this way. Maybe others have a different theory about that, but yeah, the pound dollar indeed. We'll take a look at that, Darshan. Great observations. Indeed, definitely testing the weekly trend line. Very interesting. Well, from a technical point of view, Moga, I do see it there, but I do realize that there's resistance at 136, 137. But if you follow the technicals, we are breaking to the upside as we speak. There's no doubt about that. And what the target would be is indeed the 272 if we do break. And that's just the technicals using fibs and trend lines. If you would use this, I'm not sure how much you use these tools, but if you use these on all time frames, you'd see that that's how the currency develops. But we have to be aware of that resistance. So we have a daily close above. Let's zoom into the 4-hour chart. Actually, this trend channel now getting, in fact being broken, right? Indicating more impulse, the light blue trend channel. We can move this one a bit lower now, in fact, like this. All right. And we can even put a fib on this up move now. There we can see that we got a 50% bounce, and the target of that is at 136.40. So let's see. There's still some space to that 136.40. Alrighty. What else to say? We got the bigger trend channel, as we know. We talked about it yesterday. There's some space up to that top of that trend channel as well. So there seems to be potential for another 100 pips maybe today on the euro dollar. Okay, so let's take a look at our intraday analysis now. So just to finish your question, in fact, if that's a problem for the European zone, I didn't fully finish the question for you. Maybe, but you know, that's something that I don't think really will influence the price necessarily. Although if we do hit the target at 141, nothing says that we cannot close and reverse, and within a day we could be under the 140 again. I know that Merkel said it ideally is between 130 and 140, or did she say 120, 130? I'm not sure anymore. But you know, that's just her opinion, and the market is consisting of so many players that will always be the true reflection of price in a way. It could be that the market factors in Merkel's opinion, but that would of course be visible then through price. So everything is in fact reflected in price. Let me say it this way. So you know, if that's a problem for the European zone, and people think the market thinks that's a problem, then maybe there will be a response to that indeed. So let's take a look at our pivot point indicator here. We got a H3 short at 135.65. The H4, wow, that's way at 136.20. That's not so useful information because, wow, it's really far away from here. That's because of the volatility of yesterday. Personally, I think that 136.40 from a technical point of view, and 136, 136.40, and 137 are key resistances. It's not really matching that much with the Gorilla pivot point indicator at the moment. As you can see, 136.20 is the H4, and 137.15 is the H5. So 137, 137.15, that's more or less the same. We got maybe the other, if we look at it from a different perspective, we got a L3 at 134.53. It is, without any doubt, the playing field is just always a bit more difficult when we get a massive move like that. There's no doubt about it. And it makes it a bit more problematic to trade, because how do you approach the entries especially, and the stop losses? Always a bit more difficult. So the Camarilla, well, I wouldn't want to short personally at the H3, as you can imagine. So it's really saying wait for a move down, way down to 134.50, so that's another 100 pips down, or wait for another 80 pips to the upside before taking a long. Well, I don't know about you, but I don't think the chances of that happening today are quite slim, I think. And I would assume that you agree. We have an H3 close by, but I wouldn't want to go short against such an impulse, against such an uptrend. And I hope you agree, because if not, then I think that's very risky. All right. Otherwise, we can still take a look at other indicators, but maybe we can take a look at a short-term time frame here to see if there's any way of trading this. You can see that the band has caught up with price. You can see that price was so impulsive during the FOMC meeting that it really gapped away, as you can see, then flew up right to current level and then went sideways. And that allowed, because at this top, the difference between price and the moving averages was huge, wasn't it? You see that? It was a major, major gap. Of course, because it went sideways, it allowed for the band to catch up, and in fact, price didn't even hit the band, just barely hit it, maybe, no, just missed it by a pip, but is already using that as a springboard for continuation at the moment. The 5-minute world, it did catch up, and this 5-minute world is using the band as support all the time. So maybe that would be the only way to trade it, is using that 5-minute band as an entry with a tight stop loss below here, and hope for one more of those bounces, in fact, just as we've seen before off the band. All right, just like here and here. You see those bounces didn't really go far, did it? It went up a few pips, down, up a few pips, down, up a few pips, down, down, up a few pips, down, up a few pips. I don't know. Let's see. We don't know yet. All right. So it's kind of quite corrective, as you can see. But that's logical because it was Asian session as well, of course. Let's take a look at this one. Obviously, all the color indicators are going to be green here, right? Because, well, that's clear. So we don't have to even look at that. That's so obvious. How about this? This is all green logically. We don't have to be Einstein to know that or expect that. 1 minute chart, kind of oversold. I think the only thing is left is really looking at a very short time frame and scalping, because otherwise maybe the only thing that could make sense is a day chart and a huge swing trade, but even that wouldn't make sense to me. It still has to settle down in a way. You know, it's still an aftershock after the impulse, basically. So I don't know. We can, if someone wants to keep an eye on the euro dollar, please do so. Otherwise, I would say let's take a look if something else is going on that might make sense to trade. Same problem with the Camarillo indicator with the pound, right? Same exact issue. So instead of looking at the Camarillo, I would say let's take a look at our technicals. So let me move over to the other chart here. Pound dollar. That is right at the 886 fib, and the weekly trend line indicated by the black line, and this is right at this year's high, which is 161.77. That's that highest red line right in there. That is this year's high, not that top here, because that was actually these tops were from December 30th last year. All right, so these levels, because it's this year's high, because it's the 886 fib, because it's a trend line, are definitely important. Right? Those are resistance levels. We can't deny it. However, we also have to realize that yesterday was a massive up day, a massive impulse. Usually, a day like that the chances of that up momentum getting continuation is also high. So we got a battle of the short-term momentum versus the long-term resistance, basically, as always. Will that be enough to push through to the 163 in the next top? Only time will tell, but I think that is a decent probability. But I wouldn't necessarily take a long right in here. Of course, where would your stop loss be? Who knows? Here, under today's low, what are we aiming for? We got a resistance right here. We got a 163 top here. It doesn't make sense. Not on this day chart, at least. So from a weekly perspective, we got this top right in here, right? And these tops. 163, obviously a major level, because we haven't broken above there since 2 years ago, and only shortly. In fact, hardly were we ever above 163, except about 10 weeks since 4 years. So out of 4 years, only 2.5 months did we have price action above 163. Obviously a major resistance level. All right, so resistance is clear. Let's move over to our chart on the technicals and see how that short-term or not intermediate-term momentum is acting. We're to look at the fib targets here in more detail, and you can see we're cruised through the 618 target because of the FOMC, and the light blue channel, in fact, was a very nice channel, but we got a fact, a breakout again. We got a lot of breakouts here. It moved very slowly, but once we got a breakout here. We had a breakout here, 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 and now here. So a lot of breakouts to the upside. Let's see. This was a really an interesting spot at the 50 fib, by the way, where it seemed like we were going into a downtrend. We got that bounce, and ever since this thing has been cruising up, and we got a big impulse now. So I think the likelihood of a bear flag, bull flag, and continuation is high, even though we have that weekly resistance. But you never know. We can't. I wouldn't speculate on that. Let's say we have price above actually the dark blue uptrend channel. Look at that. So that's quite an impulse there. Look at that. So it's a very interesting how the uptrend channel got broken right up to that weekly resistance. We also have on the 1 hour chart, we have fibs on that up move ever since that bounce off the trend channel. Do you see that? We got some hookbacks here. But if you look at the fibs there, basically took out all of these, didn't we? With this week's fib, which was the 382, we just smashed and went to the minus 1,000. Actually, that break yesterday happened during the pound news event, but it was a good trend line. Look at that. Unfortunately, just broke through at the news event. Then we got another bull flag, in fact, and this one broke with the FMOC. So this technically looks again like a bull flag, but let's see. We got a oscillator back to the zero line. We are close to that resistance, as I said already. We're back at the 50-minute wave and using that as support at the moment, as you can see. That's why this band here is so important. The 3-wave band is very important. It's always a good indication about time factor as well when we get that continuation. Regarding, Darshan is asking if there's maybe a short in play at 161.76. It could be. I wouldn't be attempting it though, personally. The euro dollar I found interesting enough. Normally I'm not really a level picker. The euro dollar I found interesting enough to wager an attempt. In this case, with such momentum, you know, it does make sense. I mean, there are huge weekly resistances here. So if you want to take an attempt on that, it would make sense, right? Of course it does, because there's huge weekly resistance. But the short-term momentum is so high that there is a good probability we'll just push through it as well eventually. So, you know, the probability of that trade bouncing at that exact spot is low. That's why if you take it, you need a serious reward to risk that compensates that risk, as always. Because a trade like that is going to be right maybe once in 5 times, so you need to, when you're right, you need to go for at least 10 to 1 or something like that. That's why with the euro dollar, I was aiming for 11 to 1. It's just a low probability, high reward to risk trade setup. Of course, if we get respect for that fib, like we did for the euro, but it doesn't move down, you can move it to break even. I mean, the 886 didn't get respected, but the 786, the 618, the 50 all got respected. So if you sold all those fibs, you didn't you could have avoided a loss and just taken a break even on all those fibs, in fact, if you would have traded those fibs and those big level fibs. The band here are 334 EMAs. 34 EMA close, 34 EMA high, and 34 EMA low. And then you get this band. Darshan is commenting if the push up wouldn't need a few days before happening. I don't necessarily think so, because in fact, if you look at impulsive moves in the past, there's actually a higher chance of a break of this top than ever. But you said 161.78, which is above that top. That's why it makes sense. I wouldn't go short necessarily here because I do think a bounce still is high. If the 161.78 is the turning spot, I still doubt, because I think there would still be a few continuations, in fact, personally. But still, the weekly resistance is there, so who am I to say that it wouldn't make sense? It does. And there's no one who couldn't say it doesn't, because that's just technical analysis. Those are facts, not creations, But my reasoning is that the short-term power is so big that I rather wait with pending order or taking order, because I see that continuing, and usually, historically, impulses like that do. Now, if you look at the past, here you could see a 4-day pause and a kind of a bull flag indeed after that impulse before we moved up. All right, but the difference, let me take a look at that. Yeah, the difference was it wasn't in an uptrend, it was in a downtrend though. Let's see, here we had a pretty big day. We had 1 day sideways, this was a Sunday, and we went up again. Here we had an immediate up day, then followed by retracement. Yeah. Well, there's always the possibility of a sideways day, inside day. That's why today is going to be, in general, a more difficult day to trade, because basically the market is thinking the same as we are. Massive up day, no one wants to short. Longing is maybe only possible short-term time frames. For example, with this downside, we had just immediate continuation here. This breakout candle day got one more day continuation as well. Difficult to say. At the end of the week, though, what will happen is that we will have a weekly candle probably which is pretty bullish. I don't expect a major wick on the weekly candle. Just like the euro, if you look at the weekly chart, I wouldn't expect a major wick here. But that's one good thing we have to take a look at the end of the week. That if we have this candle closing above this trend line, obviously we're breaking through with major impulse. All right. If we get a wick here, it was a false breakout. I don't expect that, but just indicating how this weekly candle will be important to measure if the breakout on the weekly chart has a sustainability or not. If the close is near the high, 0.1, and if the what was the other thing? Yeah, no, basically that's it, because we're already breaking above the trend line. Basically what we need is a break above the trend line. That's point one. Point two is that we don't have a big wick, or more, or in other words, a close very near the high. If anything, if the close is within 10% of the high, so meaning that if the wick is no more than 10%, so anything between 0 and 10% on the week chart, that's very bullish. If the wick is 10 to 25%, it's moderate bullish. Anything lower than 25% is a bit of a rejection. And of course, more than 35% in this case would be, or 40% would be quite a substantial rejection already. Anything less than 65 is just a massive rejection. So that's going to be interesting. We can measure that weekly rejection off that wick. It would be very interesting to see how that closes, this weekly candle, to measure how this FOMC has responded to this week in the candle, because that would be a big, big, big thing to look at. Let's take a look at something else. Pound Swissy broke up, but as we know, there was a big resistance there, couldn't continue as expected. Dollar Swissy got, of course, just like the logically followed the dollar and broke to the downside, right? But it only moved 150 pips, by the way. EuroCAD, we did get a bounce here. In fact, we broke this trend line here, but not getting that much continuation. We are kind of slowly but surely bouncing here off this bottom of this trend channel, maybe. Let's take a look at that. Oh, no, it's not a trend channel. It's the halfway line, as you can see. Even that halfway line is very important, as you can see, providing support. We got a Swissy news announcement in 3 minutes indeed. Thanks for that warning, Dehabai. Yeah, probably. I think the Swiss National Bank is probably getting a bit worried about the dollar Swissy. I mean, it is pushing through this trend line. Now, obviously, we have major support levels close by. At 90, 89. You know, so basically the Swiss franc has really gone sideways ever since it was really trending a lot here in 2010 to the downside, and then got the spike up. Those were big movements, good trading, but really the Swissy went flat after that, right? It's a range on the weekly chart. We're getting close to the bottom of the range. So that could be a bouncing spot for the Swissy there, even against the dollar. If not, I think that could be a level that maybe the bank is keeping an eye on, because if that breaks, well, you know, there's not much support left in a way, right? If you look at it this way, we had an up move and impulse, 236 bounce that went to target. The next target should be minus 618, but technically speaking, the 236 bounce was a very shallow bounce. Sometimes there's a high probability of getting this pattern up to the 272 and then down to the next fib, which is 382. From a technical point of view, that would be all the way down to 85. Not so sure indeed if the Swiss bank will be that happy with that. I don't know no idea if to expect a big Swissy move. No expectations on that at the moment, really. Let's see. An interest rate could always be paired with volatility, of course, just in general. Yes, for sure. You're right on that thought. Yeah, but I think the Swiss bank wants a weak currency, which means that this would have to go up. That's why I doubt that, you know, for me, I think this would be a key level, 989, because technically speaking, it could do this to the 382, but I doubt it that the Swiss bank would like that, so they could intervene maybe at 989. Who knows? to indeed weaken the currency up to that minus 618 target at 107. Totally agree with you on that. Let's see. So, well, actually, let's take a look at that news announcement then. I don't know, it's already past the, does anyone have the number already by any chance? Let's take a look a bit later, okay? If someone has that number, just let me know. We could take a look at the effective price on the 5-minute chart here. Not much, as you see at the moment. No reaction. 1-minute chart. No, nothing so far. Dollar yen is getting a bit of a bounce, funny enough, at that minus 618 target. But the thing is, as you can see, we made a down move up to 618 and in 3 waves down to target, bouncing at the 272 and the minus 618. That's why these fibs are so great. That's why they're so worthful. Well, how do you say it? So valuable, sorry. And but anyhow, we did break this uptrend channel. So the dollar yen, for me, I'm back in a neutral mode, and I'm gonna wait and see on the dollar yen, because basically, if you look at from a technical point of view, we broke out of the wedge, the weekly wedge, these black lines, but we didn't break out with enough steam. We hooked back, bounced off the bottom of the trend channel, now broke it, and bounced maybe off the bottom of this trend channel again, right? Second time. For me to be really bullish on this dollar yen, it would have to be go back in this trend channel, although funny enough, you probably could adjust the trend channel to make it in the trend again, but that's a bit too soon to do that. I would want to see higher highs and higher lows again. All right, so neutral mode here in the dollar yen, in fact. Dollar CAD broke to the downside, breaking this 1-year-old uptrend channel. Always sad to see such a beautiful uptrend channel being broken, but what can you do? It is getting broken right now. So goodbye up mode and hello down mode, and basically we have a downtrend now. Obviously we already had a downtrend on the lower time frames, but the long-term uptrend is toast. So what we need now is a pullback to trade it, because it's just right at the bottom right now. No sense. We need a pullback there. Odd dollar. Someone wrote about the odd dollar. Let me take a look what the comments were. Oh, Dustin was asking that, or saying that the biggest jump was on the odd dollar. The pound dollar had 250 pips. I didn't measure the odd dollar yet. Let me take a look. Also 200 pips. Well, the pound dollar had 250. The pound dollar, in fact, moved the most against the dollar, but the odd was definitely a good second together with the euro. But it is true that the odd and the New Zealand also increased in value against the pound, euro, and yen, not only the dollar. So there was a lot of moves on the crosses as well, and that's where I made my trades yesterday, in fact. How one can foresee what to expect from the biggest move is always a bit difficult. We'd have to look intensively at all these currency correlations, in fact, probably. But let's take a look at, technical from the day chart first. You can see 5 wave. That was maybe wave 3. Maybe this is a wave 4. Maybe. Who knows? In any case, we're in an uptrend channel, but we are at 382. We stopped at 382. Is that a resistance spot? Yes, it is. Will we break through it? We sure can. The next resistance would be the 50. 4-hour chart. Let's take a look. We had already a pretty big impulse. The 886 fib, remember, that was the bouncing spot. Went right to the minus 272 target, as you can see. It's paused there and then continued up to the 618, but even went past that because of the FOMC. Recently, we had this triangle that I was talking about, and that broke very nicely to the upside. Yeah, oh yeah, the pound I did measure from the start of yesterday. I just looked at the entire day candle. Maybe if you look at only the FOMC announcement, the odd could have been the most indeed. That is true. I just looked at the day candle, measured the day candle in fact. But if we look at the 1 hour chart, here too you can see a nice corrective triangle, a break. We talked about it yesterday, I believe, would indicate a continuation because we were already above this big resistance at 93.50. So that was already with the trend, absolutely with the trend triangle there. Here too, though, as always, the only thing we have left to trade is basically, no, sorry, that's the wrong tool. 1 second. Are small 15-minute bull flags, in fact. I'm afraid we're going to see that everywhere. We're right at the band, but this is the 1 minute chart. Probably if there's any scalp, we could wait for this move to hit the band because you can see, if you look at the 1 minute chart even, the band works pretty nicely, doesn't it? It bounced here, but we got a, price acting, the band acting as resistance here, right? Then we got a break above it, so we keep on moving up. Here we got a bit of a chop, but then price stays above the band. Now price is underneath the band. So although this is maybe a bouncing area as well, because you can see the long-term moving average also providing some movement there, as you can see. I do think that if a scalp were to be successful here, better would be to wait for a move, a lower high here, and then take the next break when we get the higher high. Because a move up will probably get resistance at this band, and we could move down from there. Let's keep an eye on the Aussie 1 minute chart later on as well. See how that develops. Maybe there's a scalp on that one later on. And the New Zealand dollar also had the same thing, really. Triangle like that. In fact, we talked about this one. The 382 fib was already a bouncing spot. We got maybe almost a 50% hit. In fact, it made kind of an ABC motion still. I was taking a long in here already, a bit early long. Went up a bit, I don't know, maybe 12 pips or so, I don't remember exactly, but then it got rejected down, went to the 50 fib, and then got that bounce all the way to the 1618. So that was nice. Technically speaking, the fibs worked very nicely, and you can see that the New Zealand dollar has been, we traded it already, I think, where was it? Somewhere in here, right? But a lot of these flags, triangles work nicely. And we traded it here as well, didn't we? Or no, that was myself. So getting a lot of continuation. And in fact, we're above even this daily resistance. So the New Zealand really like whacked the dollar here all the way from the bottom. We were looking at this and saying it can't probably break the bottom. Maybe it will bounce, and it's up already 700 pips from there, just whacking it up and up and up. So from that perspective, we're really getting a big bounce off that weekly trend line right there. Right? We were stuck at that resistance support level. We're really getting a big bounce off that weekly trend line. And the next resistance way up here. So there's still a good distance to go. Good distance to go on this New Zealand. So probably can move up this fib to the next high, and any of these fibs could be already a resistance level. In fact, if you fib the first move up, we got a 236 bounce, and we're heading to target. So probably we'll get a small stall at the 84.30. And then most likely the 382, any of these fibs, the 236, the 382, or the 50 will be a bouncing spot. If it's the 236, it's also a 50 of the smaller move. The 382, it's a smaller 886 or 786. So I got 3 fibs on. I know that's confusing, but basically what it boils down to is that this entire zone will be support once we hit this 272 target. To put it simple, any of those could be the bouncing spot. If you look at our channel, the channel broke, actually went all the way from the bottom of the channel to the upside, broke out of it, hooked back to it, and bouncing up. Very, very impulsive, and because of that, because it was already an uptrend, in fact, this is probably the most impulsive part of it, which means we probably have a few waves to go like this. There will probably be a lot of bull flags still to come on this New Zealand dollar to the upside. So beware of that. Just not ready right now for me with that target so close. I want to pull back personally. As you can imagine, the Swissy didn't move much though. Let's take a look again. Just moved a few pips, not really having that much impact. All right. Pound yen. For those of you who wonder, I got out of the pound yen with the profit. I took out the pound yen right in here. It missed my take profit by an oomph. Let me take, or was that a bit earlier? Let me just take a look where I took it off. Either here, now I don't remember. Either there or there. One of these two tops. I really don't remember. Because it missed it so close and it was so choppy. All right, it was so choppy. This entire thing was a range. But you can see that the idea was good because look at this pound yen. It's already up at 159.50. Yikes. Right? It just had a spike down and then continued up all the way, moved up 200 pips as well. And is really flying up because now the yen is flying up as well. Plus the pound was moving up, so you can imagine. The news event did send it down. It sent it down 50 pips, closed and reversed 100 pips here. So it did move quite a lot. Then it quieted down indeed. And here we're getting some impulse. A lot of impulse. Well, it's a shame we didn't start with the pound yen. You can see that if you look at from a 4-hour perspective, we broke that top. Remember, we had here We had 618 right to the 272 target, then broke the top, the major high here, hooked back to that, and that's what we're trying to trade, is the continuation of that pullback, because we broke the top, pullback, trying to trade that continuation, but what happened was it just went sideways so long that from a intraday perspective, it just took too long for me to really capitalize on what is now actually finally continuing. So I attempted it a few times, but that's what happens sometimes when you try a few times to catch that long and bounce, and you just miss it. What can you do? This is the 1 hour chart now. That was the 4 hour, by the way. But you can see from a daily perspective, or even from a weekly perspective, we're pushing now through that green line, which is that high back from May this year. All right, so really a lot of pound-yen continuation. So that's that high right there. And you can see very big impulse, huge triangle, which got broken, hooked back, and now continuing in that break of that triangle. So you can see break, pullback, continuation, and here break, pullback, continuation. If we then zoom back to the 1 hour chart, just to get that context again, and a most likely spot where it could stop is 159.70, I would say. Yeah, we would have to put a lot of fibs on just to see where the stalling point would be, but I don't know. It's not so relevant. I would rather move on and see if there's anything to trade right now instead of doing that analysis, if you don't mind. But yeah, this was a pretty good bounces off that band. You can see pretty useful. Anyhow, that's moving on. The Aussie yen, wow, even continuing up. It hit the 272. In fact, I was thinking about buying the Aussie yen as well, but I took the New Zealand yen. So I didn't want to over risk and decided just to stick to the New Zealand yen and not add the Aussie yen. I had entry orders. I took it off though. I had at the 382 and the 618 fib. But you can see that my target was the minus 618. And you can see right to the 272 target. Got a bit of a chart pattern there. Then right to the 618 target. If you then put a new fib on, we bounce off to 236 and we're going again. Wow, 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 wow. That has to do with the yen power there, also moving, rebounding up. So that's a huge momentum there. I'll show you the New Zealand yen. That's the trade I took, but I took the profit already. It's still a good 2-to-1 trade. Let me see where. I don't think I have the New Zealand yen. Well, basically, it's just the same as this odd yen. All right, I just it's the exact same setup from these fibs to the 618 target. That was my trade, but in fact, maybe should have hanged on to higher targets. But okay, I'm happy with that. Pound New Zealand. Yeah, dollar yen really getting a bounce, but we are approaching a bit of resistance there. Pound New Zealand was the other trade I took, by the way. That I closed for 3-to-1. That trade was based on this. Let me show you. We had a break of this support line, the black one, from a higher time frame. Then we got a break of a shorter time frame corrective pattern with a good breakout, and I was trading this pullback and continuation basically. So that was a 200 pip trade. I closed it out a bit early. I closed it out here. Didn't have any patience anymore to reach the 618 target, but my target was in fact 191.670, I think, right above here, just few pips above the green line, the minus 618 target I was officially targeting, but I have to admit I closed it out here. I lost patience with that. I don't know why, but sometimes it happens. I took that 200 pip trade, which was a 3-to-1, a bit more than 3-to-1 trade. The reason why I took it at the 618 and I saw a 50-minute rejection wick off the 618 fib, which was the reason I took it, the entry right at the 618 and off this 50-minute candle, although it still moved up to the 786, then moved up to the 886. That was the final turning spot before it moved down. So you can see how these concepts work. Break, pull back, continue. And the funny thing was, I wasn't looking at the charts at the time, but if you put a fib on this, another breakout, because we had again a breakout here, right? If you fib the breakout candle, which was a very good breakout candle, you got a 618 bounce again right to the 272 target. So, you know, you could have scaled out and in a lot of times. Scale in, scale out with the 2-to-1 trade. Scale in, scale out at that target or this target, and another scale in here for another target here. So now currently there's nothing to trade on the pound New Zealand unless you want to take a speculative level, speculation of the bounce of this level, which I don't think is really worth it. Wouldn't make sense to me. It's not that big a level. It's just a daily support. I don't know. Wouldn't make sense. Otherwise, all these currencies have traveled, in fact. That's the thing. So Euro Yen is continuing up as well. Got 2 break-evens on this one. Should have been maybe a bit more spacious on the stop loss. And now up 200 pips. Well, what can you do? Those things happen. At least I got the New Zealand yen. But the direction was at least good on the Euro yen, pound yen. Just didn't. Pound yen, I got a couple of, one trade with 3-to-1 though, at least. With the Euro yen twice break even to the upside, although it eventually did move. Just timing wasn't that right as the New Zealand yen and the odd yen. Euro New Zealand made the same move. I didn't take this trade though because it was just kind of the same story, but here too basically break, pull back, break, pull back, break, right? So that's about it. I wouldn't focus on this too much anymore. Let's okay, the Aussie is got that rejection, as I said, off the band, and I was waiting for the higher high. Let's take a look. We broke that higher high. Oh shit. I just wanted to take a buy. Just pulled up this order sheet to take a buy off the retrace here. The only thing I wanted to do, you see I'm sometimes too slow for a 1 minute chart. The only thing I wanted to do was calculate where I would have entered to see what the difference was. Well, anyhow, next time if you like the trade, just keep an eye on it yourself and say, hey Chris, you know, watch out. This thing is about to break. Go to the Aussie and take a look at that 1 minute break here. It's about to happen. Because sometimes I don't see those things if I'm looking at other charts. If you like the trade. If you don't, then that's fine as well. I mean, but that's really the only trades ideas that I had today because everything moved already so much that except the pound yen, which I didn't really think about, that really moved a lot in our session this hour. Unfortunately, just too late with looking at that. I was basically counting how many trade calls I made correctly, because there were so many trades that materialized this week that I wasn't really focused that much on, because everything moved. I didn't expect that much to trade this session anyhow. So I was kind of calculating how many wins, losses, and break-evens and what the R2R was. And if you're interested in that statistic, by the way, last 2 weeks, 13 wins, 11 break-evens, 5 losses. So it's like 45% wins, 38% break-evens, 17% losses with my breakout and pullback strategy. This is a specific strategy, though. And the wins are usually like 1.5 to 2 versus the loss. Pretty good. This week, 7 versus 5 versus 2. So I was calculating that. Anyhow, back to the odd dollar. Got sidetracked there. Where is it? Here. Okay. Oh. Let's keep an eye on it. Maybe they're still worth trading. Take a look at the 5-minute. Kind of getting a retrace of that 5-minute candle. Fibbing this last 15-minute move up. Let's see how the 15-minute world here, we're getting maybe engulfing twins. Let's see if that happens indeed. Let's wait 2 more minutes and see how the 15-minute candle ends up, and the 1-hour candle as well, by the way. I make a decision then. If you want to fade a big move, Darshan, the best to do that would be, in my opinion, not that I'm not an expert on this by far because I don't focus on it, because the first thing that I think of if I see a big move like that is that I am careful with trading. And the only thing I'm thinking of is I want a corrective pattern like this that is long enough that if we break, I would take it with that direction. That's my primary trading. But because my primary trading is breakouts and pullbacks and continuations. So what I'm looking for is, for example, on the pound New Zealand, there's a classical example where we had a break of a good 1-hour consolidation. So that is a trade I can take the breakout. Then if we get a pullback, as you know, I took the pullback on the 618 fib, got the continuation. And in fact, if we had another breakout with a good breakout candle, I can even fib that move and take the pullback again, or the breakout and the pullback. So you see, you got 4 scale-ins there. One of them closed. You have to make sure that the risk isn't too much, of course, on all of them. Hopefully these 2 are closed, in fact. Hopefully the breakouts are closed at the bottoms, and then the pullbacks are the scale-ins again. So that's my primary method of trading with the trend. But if you want, the best thing is to look for multiple dollar divergence. First of all, 1-hour chart, usually if you have a move up like that, what we'll see is the 1-hour chart move back to the 0 line. That hasn't happened yet, and we're still pushing through up, even though this is at the 0 line. So this can push up a bit more, and we'll probably see a bull flag bring this to the 1-hour to the 0 line, then see the next break the top of this one, and get divergence between these tops. That's probably step one, is to have at least 1 hour divergence, in my opinion. So once you have that, then you can wait for either a lower high on the 1 hour chart, and then you have probably the first moment that it could be a turnaround there. So, or in other words, if I zoom out like this, correction, this, and once we got divergence between these tops here and a 1 hour lower high here, then that would be kind of a reversal confirmation trade where the red lines are. So clearly the MACD, awesome oscillator doesn't have divergence now. And if the MACD has, it's something I don't look at, the MACD, for this. But I can't imagine the MACD having divergence. And if it does have divergence, then I kind of almost doubt its usefulness, because the awesome oscillator definitely doesn't have any divergence. And if the MACD is, then I would definitely trust the awesome oscillator much more, because I know how it works, of course. And if the awesome oscillator has that strong reading compared to the others, then that's a strong reading, believe me. But also logically, if you think about it from a logical point of view, from just looking at price action, it just moved a lot in a very short time. So from that perspective as well, we don't even need an oscillator to understand that it moved up 250 pips in 3 hours. That's like 4 hours. So that's like 60 pips an hour. That's a lot of movement. Never, ever in this up piece did it move 60 pips an hour. You can just measure the speed of price, really, and take swing high, swing low, and divide it by the hours, and you'll get a raw, or not a raw, in fact, a very precise number of pips per hour. And this was definitely the highest. So for me, it's not even near a potential reversal position yet. I would definitely need a 1 hour divergence. And in fact, if you look at the day chart, oh, there is no divergence on the MACD. Okay, no problem at all. That's good, at least, that it confirms each other. I started to have doubts about that MACD, though, but that's good. So you can see the day chart, is building as well here. It has that momentum building. So we did get that bounce, didn't we, off that 5-minute band there. For me, though, to be honest, as you already know, this was probably a good bounce, I guess. I don't know. For me, after I get discouraged if I see such a big move to buy it here, personally. Nothing I can do about that. But for me, a good buy would be, though, if we do make a bull flag, as I said, and get this back to the zero line, the next break I would love to take, because that is a very high probability. So keep that in mind. That is a very high trade setup, in my opinion. Will it always work? No, it will not. It's not a guarantee, but I think it's definitely a good probability there. Same thing, really, for the pound dollar. pound dollar, no divergence. Also, you see, and that's why I'm so leery about taking shorts, because of the fact that although we're at huge resistances of the weekly, looking at the short-term momentum and looking at this 1 hour chart, that's why I don't want to attempt it, because of the fact that I still see on the short-term time frames numerous pushes like this up before we get some weakness, some divergence, and then a reversal like that. Some head and shoulders, for example, etc., like the euro dollar. So that's why the first push up is so likely, because I expect even more pushes up. That's why picking a level, a reversal level now, I think is risky, because I would rather wait to see how far this currency pushes up with those last pushes, and those were good breakout trades with the trend. See what I mean? So you will have a few good with the trend breakout trades. Eventually this will die out with divergence, and then we can start thinking about a level that makes sense, maybe to pick a top and say, okay, that could be the spot that we start making lower lows and lower highs and start reversing part of this up move. So until then, I'm looking for breakouts with the trend, and when we get those divergences, then we can start thinking about level pickings and maybe reversals. In my opinion, it could be, that's what I've noticed most of the time. Let me say it this way. So there's a fair chance that this will happen now again, especially with the euro, because there's no resistance is further away from here. The pound could see a bit more resistance with those up moves. So if there's something that I would like to long, there's probably more the euro than the pound, although the euro pound is moving to the downside. So I'm just waiting for those bull flags to occur on the pound and euro and the Aussie, get that oscillator to the zero line on the 1 hour chart. That's my game plan, basically. So yeah, that was my week of trading. Unfortunately, should have gotten a bit more profit on the yens. Maybe not patient enough. Maybe too tight of a stop losses. You know, that's just two times break even on the euro yen, two profits on the pound yen, one break even, I believe. Yeah. New Zealand yen profits, pound New Zealand profit, euro dollar loss, New Zealand dollar loss. But those losses were a lot smaller, luckily, than the profits. So that's why I'm in profit. What else? That's about it, I guess. Just should have capitalized a bit more on the yen, I think. Anyhow, dollar Swissy. So that's the fading, how I would fade a big move if I were to, be looking for that. Let me say it this way. 1 hour chart Aussie. Sorry, it's already 9 minutes ago. Actually, yeah, the band is being used as support. So funny enough, even the 1 minute chart really giving an idea where you can find resistance and support, isn't it? Oh well, now it's probably just sort of stick to my plan, which was enter here with a stop loss here, but didn't do that. But I'm not a big scalper anyhow, so. Anyhow, the Swissy, it's still at the top of the bull flag, by the way, just that you realize, all right? And this too, you can see the 50-minute world has a very strong oscillator. We'll break that, get divergence on the 50-minute world, and we'll see a retrace, all right? What happens is that this 50-minute bull flag will break at one point or another, and we'll get divergence when we break. that will mean that on the 1 hour chart we make enough move, 50-minute world has divergence, and we'll get a retrace, which means that the 1 hour oscillator will get back to the zero line. We'll make a bull flag on the 1 hour world, break that bull flag, make a new high, get 1 hour divergence, and we'll have 50-minute. We would have had 50-minute divergence, then 1 hour divergence, and in the meantime, you get like an angle like that, maybe. Then we break that, maybe get one more second divergence, a double divergence on the 1 hour chart. Isn't too uncommon as well with a strong move like that, by the way. So once you get double divergence on the 1 hour chart, then after maybe 3 top breaks, then maybe we can get a bigger reversal. That's something what I'm expecting here. Anyhow, dollar Swissy, yeah, breaking this bottom. Well, that's not the bottom I was really indicating. The bigger bottom is here at 90.89, right? So that's still 80 pips to go to the downside. But there was this smaller bull flag or triangle there indeed. The monthly charts, well, you can see the band acted as resistance, couldn't push through it. So I do think, though, that this level is a big support level, and there's a chance that we'll bounce off it. I still think that. Same analysis as I said earlier on. Even if we do dip below, then somewhere around 85 would be still a support level. All right. It's interesting how the band works on all time frames, though, from a 1 minute chart to a monthly chart, because you can see how this nicely works the resistance. Cool, isn't it? Resistance, support. Very nice. Anyhow, that wraps it up for today, I guess. Any questions that you might have? You know my game plan for probably not today, though. Probably will happen later today. Well, maybe today, but later on, maybe New York session or tomorrow morning. Yes, yeah, there's a question from Darshan here regarding the fundamentals. And if the Fed didn't say that they expect to hike up the interest rates, no hike up in interest rates. In fact, they kept the quantitative easing at the same level as they were having. So there was an expectation of the market, if anything, to decrease the quantitative easing by just a tad, just a bit. No hike is expected. No, that if anything, first of all, the quantitative easing has to decrease, and then the interest rates might move up. So that's still far, far away from here. I think the Fed said that the interest rates are fixed on that level. I don't know, up into 2014. So you're talking about another year. Yes, a hike would put brakes on the growth indeed. So you're talking about another year, maybe even. I'm not sure exactly how far they've pegged it down to that level without increase, but it's still a year, I think, at minimum. But I'll have to check that. I don't know exactly. So even the quantitative easing couldn't, didn't get any follow through, and they're just still quantitative easing there. Excuse me, which of course makes that dollar worth less. Sorry, I'm losing my voice. Well, anyhow, even if you are a scalper and you just found maybe another method to scalp, you can use this band as well, apparently, as you can see. I've never tested it really as a scalping method, but not doing that bad. You can see here too. Worked as a bouncing spot. So I see no questions except a comment from Darshan that he got a few 200 pippers yesterday. That's great. Awesome job. Me too. I got 90 on the New Zealand yen and 200 on the pound New Zealand. So I'm way over the moon. I'm very happy with those trades because those were really nice profits for me, making a nice 5 units of reward, which is really great. Plus the pound yen, I had 3, well compensating a few of those losses. So it was a good week. Could have been even better though if I would have gotten the euro yen and odd yen, but would have, could have, should have, right? Doesn't matter. Still could add, as I said, just to repeat, those 1 hour, keep an eye on those 1 hour time frames, okay? Because those could be good bull flags. Those are good trades that are coming up still. But great job there, Darshan. Great job. Awesome. Awesome. Very happy for you. I don't see anything else. Well, then I wish you good trading. I hope to see you then tonight because we have a webinar on breakouts, as you know, hopefully know. And if you want to register for that, just go to admiralmarkets.com, education, webinars, and sign up for intraday, how to trade divergence. Oh, it's not breakout trades. Sorry about that. It's how to trade divergence. Also very important, though. I was mixed up there. And then the next week, how to use Fibonacci, by the way. Alrighty, folks. Thanks, and see you soon. Cheers.